sold somebody the right to buy that stock at a certain price, and then they said, okay, I'm going to do that. So then you had to buy some stock to fulfill that. Does that make sense,
Yeah.
Martin?
Yeah. Makes sense.
You do. You
Complete
understand,
sense.
yeah? If you're
Yeah.
short a
Yeah.
call? Okay. So maybe that drives some of the purchasing on day one. You don't want to take the risk because you're maybe afraid that there are way more people that are short calls than you actually know. Particularly if the short calls are OTC, meaning over the counter, not listed. And I don't think there are any listed derivatives on an IPO stock, but I don't know, remember that off the top of my head. But my point is, there's a lot of back and forth going on day one,
Okay.
and I think the best thing to do for an IPO stock on day one is one of the things that I'm actually really great at, and that is you're supposed to do nothing.
Really? You're just supposed to do nothing? Like really, you just do nothing? That's the best.
If you have no, first of all, if you have no position,
Okay.
definitely do nothing. If you have a position, if you've paid 185, or if you're one of the really early investors and you don't have a lockup, and you're just thinking, oh my God, this thing traded at 385. I'm happy to sell there because I paid $43 for this, in Series D, whatever it was. Then you should do something, right? But again, there's a whole bunch of different ways you can hedge that with derivatives and stuff like that. But paying like these high prices for an IPO stock, even with a great story, is just silliness, particularly on day one, because there's just not enough information about the stock for everybody else, for the market itself to know what's going on.
Yeah, I see.
Right. So people are mucking around in the market on those days. So the stock is still way higher than its IPO price.
Yes.
Right. So it's still even it's bouncing around. You can see it. It's 299 now. It was as high as 303.
Yes.
It's actually, it was as high as 303. Now it's 299. So if you paid 185 for it, which you couldn't have yesterday unless you were issued that stock on the IPO, you're still deep in the money. But my guess is, I feel like I always have to say this, I'm not giving stock advice or trading advice, is that this thing is just going to drift sideways and lower for the next 6 months. And that should be expected behavior because that's what most IPOs do.
Okay.
Does that make sense?
Yes, make complete sense. And then you have the lockup period that may expire, right? And so then after that, maybe some stuff happen again. And after all of these things, we go back to a more normal cycle.
Right. Now we can talk about this in more general terms, right? Because again, this was the largest IPO of 2026. We're in May.
Yeah.
In the middle of May, so almost halfway through the year. But I think from a more general standpoint, what this is telling the market is that there is a window now, particularly for AI companies. Remember, we were talking about this before, right? Like, why would, not even just IPOs, but even just from a capital raising standpoint, why would these AI companies go out and either A, try to go public, or B, try to raise more money? Is because there's still a little bit of a frenzy around, you know what I mean?
Big
AI
frenzy.
stocks.
Big frenzy. And it's just the beginning. I think to me this is just the beginning because right now we are in phase one of AI, right? Like these LLMs that we are using are just the V1. We are going to see massive improvement, I think, over the next few years. And I think the next big thing could be getting rid of all of this MD file, for context and memory and knowledge base and all of that. This is so stupid. So maybe the fine tuning is a solution. Maybe like something else is going to be a solution. But when that happens, man, this is going to be a really big change because so much stuff are going to change, and that could trigger another frenzy to me, right? Because all of a sudden, that is once again, so many things are going to happen that we are going to see new use cases the same way agentic AI happened 6 months ago and changed absolutely everything.
Oh, yeah.
The way all of these harnesses like OpenClaw and all of that are not used anymore because we can fine tune the models, for example. Then all of a sudden, we're gonna see like tons of new use cases. So
Right.
that's just the beginning of the AI frenzy. That's my point, right? It's probably just like one frenzy in the V1 of AI, but we're gonna see V2 and V3 and V4 and just going to keep going, and that's just going to be more and more frenzy, I think. It's just the beginning.
Right. And look, here's the other thing. We talked about, does this stock actually have a story? Right? Is it a story stock and also like an infrastructure stock? So here's the thing. We know that that compute right now is scarce.
Yes.
So they have at least two things, but there's more, and I'll get to that in a second. But the first two are, they have a completely different paradigm on chip design than NVIDIA. So that's one part of the story. And the second part of the story is that everybody knows that compute is scarce.
Yeah.
So if they're building into scarce compute, by definition, there should be demand for their stock as well. and there
Yeah.
should be demand for their product because people are like, this thing's not working, but if because we can't acquire it or can't access it. But if this chip is if it works and if it's faster and better for inference, or even if it's just as good or almost as good, we're happy to have it. And if their clients are some of the hyperscalers, which in this case OpenAI and AWS, well, now you have a story.
A good story.
And that's actually really interesting. But here's the other part of this story that we haven't spoken about,
Tell me.
and that is, well, what else would drive the valuation? And again, it's a rhetorical question, but in my mind, what else would drive the valuation? Well, what's the fastest way to innovate is to watch what's happening in the market. And then if you see somebody like Microsoft has done this for years, you see somebody that's innovating in a way that's way different than what you're doing. Facebook did this too, right? Instagram was an innovation. WhatsApp was an innovation. And they were just like,
Yeah,
mine. They just
it's
waved
really
it
yeah.
in. They just bought it. So if there's a lingering bid for companies like Cerberus, whether that's from Chinese companies, from European companies that are chip makers, or from NVIDIA itself, they're like, oh, darn it, those guys beat us to the punch with this thing. Why don't we just buy them? Because they have a ton of cash. And instead of allowing them to compete, maybe they just watch what happens, see how successful they are, and they just wave it in. So now there's this lingering bid out there. There's this floor under the stock that people are saying, because maybe some of the analysts are out there telling their clients, their institutional clients, like, they may not earn as much money as we expect them to earn, but there are two ways for their stock price to rise, at least in the medium term. One is their earnings increase exponentially or like by factors. But the second is that because of the scarcity of compute, NVIDIA just says, you know what? We're going to Instagram them. We're going to pay a price that nobody believes is the right price. But in
Yeah.
5 years, it's going to be super cheap
Yeah.
because now everybody's using Instagram or Cerberus chips.
That would make complete sense to me. I have nothing to add, Michael, because I think this is this is a really really good. I think this is a really good idea. Yeah, no, I think it would make complete sense, right? Especially if they do something different. And my first feeling is like if it can open a new market for Nvidia. You know, like if Nvidia has an idea of how they can use their chip to do something different and not necessarily compete with them, that may be a really, really strong potential acquisition, right? Like okay, good guys. Or if by combining forces, they can make some economy of scale, or they can be faster, or they can join forces in terms of production, or for things like this. Once again, if things get scarce, like to a point where having two companies who compete with each other doesn't really make sense, then you know what, like just combine forces and build one big champion that is going to be super strong. Also, we know that in China they are building their own chip, right? And if
Yeah.
Huawei becomes really, really, really big and become a real threat to Nvidia, then maybe Nvidia's gonna be like, okay, now let's build again a big champion that is going to be able to compete with the scale of Huawei, right? So I think
Yeah.
all of these definitely push towards what you just said. Yeah.
Yeah, and one more thing, right? So let's go back to the conversation we were having last night and a week ago about GameStop, which has like $4 in the bank trying to buy eBay at 56 bit, trying to pay $56 billion for eBay. There's just no way they can afford it, right?
Yeah.
It's like a 12-year-old going into a store and going, "Give me 3 of those Ferraris. I'll figure out financing later, but I got a date tonight for the prom." It's like you're only 12. You don't even have a date. But NVIDIA actually, so this company went public today at a valuation of around $67 billion
Okay.
yesterday. Yeah.
Okay. Yeah.
And NVIDIA has 60. I did some research on this, and NVIDIA actually has $62 billion of cash, just cash in the bank.
Oh, really?
But Martin, it's a $4 trillion company.
Yeah. So that's what, like
So they could actually stay
billion.
stock for it.
Yeah, it's really small, right? And then the
They could pay
combined
100. They could
company.
pay 100. They could pay.
Yeah.
Sorry, go ahead.
Yeah, no. Then we can pay a lot in stock, and then the combined company now makes ton of sense as well, right? Like now, if you have like two chip makers who are really really good and who have clients and revenue in the age of AI, now you can make the argument that the combined company is going to be valued more than both of these than the sum of the two companies, right?
Yeah,
So yeah.
and I want to put this, I want to put this into context in the framework of, sorry, the GameStop and eBay deal,
Mm-hmm,
which I'm pretty sure is not going to happen.
mm-hmm, mm-hmm,
But because a $4 trillion company with $62 billion in the bank can literally pay stock for any company in the world it wants, and most mergers and acquisitions trade at a premium, not just a premium to the IPO price, but like a premium to tomorrow's closing price. And if it's 67, or let's just call it $70 billion to make it easy, you could pay $30 billion more, which is what, like a 40%, 40 something percent premium to it. That's good for people that have it, particularly for people that bought pre-IPO. Not only do they get the 68% IPO bump, now they don't have to wait 6 months, blah, 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 for the stock to drift down. But if Nvidia buys this thing at a 40 something percent premium, pays $100 billion for it, 70% in stock and 30% in cash, which they could do with their eyes closed and their hands tied behind their back,
mm-hmm. Everybody's
who's going
happy.
to complain? I'm, I'm,
Yeah,
I'm not saying they're
exactly.
going to. I'm not saying they're going to do this tomorrow, but who's going to complain, right? And maybe Nvidia waits 6 months
To get the price to a
for the
normal.
stock to drift back down to its
Mm.
IPO price, and then just says, "This is great." They get to see some more progress, some more order book progress for Cerberus, and then just goes, "You're sitting in our wheelhouse. We're going to take you out." Like, that would not
Mm-hmm.
surprise me at all. I don't
Yeah,
think it
no.
would surprise the market either.
But yeah, and maybe do you think that's part of the high pricing?
So it could be, because remember, here's what happens, Martin.
Mm.
I don't know who did the IPO. I just didn't look to see who led the IPO,
Okay.
meaning which investment bank led it, and who was in the syndicate that actually went out and sold this.
Actually, I have
But
another
some of them
question.
must know some. Go ahead.
Yeah,
Go
I,
ahead.
I have another question that is related to that. If how do they define the price, and was it mispriced to have such a big increase? Should have priced it much higher, or do
No.
they know something about Nvidia? Like, how does that work? How does this mechanism work?
So, really good question. This is a question that individual investors ask all the time. It's like,
Okay.
they were dumb. They priced the stock. They put a 185 price on the stock. They were so dumb because the first trade was at 385.
Okay.
Shouldn't they have done it? Didn't Nvidia? No, didn't Cerberus leave a ton of money on the table? So here's what normally happens. They do a roadshow.
Okay.
So the banker that's actually running the deal don't want to take all the risk on it. So they do a syndicate. So they get three or four other investment banks or three or four other distributors involved, and they basically do some financial projections, 3 year, 5 year, whatever it is, and then they go on the road and talk to institutional investors and say, "What would you pay for this?"
Okay.
And they discount like some of the projections because they're maybes, right?
Mm-hmm.
We don't know. Here's what they did last quarter. Here's what they did next quarter. Here's what the overall market looks like. Here's what the constraints are in the market. Here's where we think they're going to be. What would you pay for that? Well, the investors are going to be like, we'll pay $1 for it. And they're like, okay, it's a little bit more expensive than that. And they kind of come up with this equilibrium price where they feel like they can sell the whole deal at 185.
Okay. 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 Okay.
But they know, but what do they want to do? They want the stock to be a story. Because let's say they did it, let's say they did the deal at 350.
Mm-hmm. Mm-hmm.
It
Mm-hmm.
IPOs at 350. Well, then the stock trades up a few bucks after the IPO. No one's talking about it. It's not a story at all. Nobody cares. We wouldn't even be doing this thing,
Mm-hmm. Mm-hmm.
really, because it just would have been Cerberus goes public at the price where everyone said it was going to go. There was really no interest in it afterwards. Does anybody want a donut? But what happened was it went public at 185. It spiked up to 385 or whatever that number was. People went insane. Now everyone's talking about it. Now everyone's going to pay attention to it. So
Mm-hmm.
in some ways they left money on the table, but almost every popular IPO leaves money on the table on purpose because that drives future demand for it.
Okay. Makes sense. Okay.
And
Mm-hmm.
what it also does is, I think it's called a green shoe, where they hold back some stock, or the investment bank has the right, the underwriter has the right to issue more stock on the fly if demand on the IPO day is higher than they expect,
Okay.
which then allows the company to raise more money. But you don't know if there's going to be, because this thing could have gone public at 185 and then it's going to drift it down to 170 and everybody went home.
Mm-hmm. Mm-hmm.
So I wasn't following it closely enough to see if there actually was a green shoe on this thing or not. But the point is that, like, you can say they left money on the table, but they also created massive demand
Mm-hmm.
around like, I want this thing, I have to have this thing. Now everyone's going to pay attention towards the
I
next
see.
6 months, and that's beneficial. And you're also right, Martin, that there it also may be the case. I won't say it's illegal, but it's kind of unethical for the syndicate and the lead investment bank to go to potential acquirers
Mm-hmm.
and just go, what would you pay for this thing? Because even if it's above 185, then they're
Mm-hmm.
like, okay, this is the right price because we know that there's demand for it above here.
Mm-hmm.
And we also know that in the 6 months after we do the issuance, maybe there will be an underlying bid for this stock that's higher than the IPO price because they want to make sure that they can take this thing over.
Yeah, yeah, yeah.
And also, when they go to the road shows, and when they're having private, unrecorded conversations, one of the things they're saying is, look, we know compute is constrained.
Mm-hmm.
We know demand is exploding. It's not unlikely that Nvidia would buy this thing or Intel would buy it. Intel doesn't
Mm-hmm.
operate at all
Mm-hmm.
in
Yeah,
the
Intel, yeah. Mm-hmm.
GPU space or in the AI space, really, right?
Yeah. Mm-hmm.
So now they're playing Intel that has a little bit of FOMO off of Nvidia's like, we really want this stuff, but we didn't invent it, kind of thing. So now everyone's interested, and I think that it's not unlikely that during the roadshow these conversations were had with the institutional investors and even some of the individual investors that ended up buying this stock on the IPO. Does that make sense?
Complete sense. Okay. Okay, okay. Super interesting. Super interesting. Super interesting. So let's see what the future holds. That's gonna be interesting.
Yeah, let's put a placeholder in this. Let's
Mm-hmm.
keep paying attention to this like on a
Yeah.
month by month basis, right? We don't have to
Mm-hmm.
do full stories on it, but it'll be interesting to watch. We should make a note to ourselves to
Yeah.
say, let's see what happens to servers
Mm-hmm.
over the next 6 months,
Yes. Let's do that. Let's
because I
do
think it's
that.
going to
Let's
be
do
super
that.
interesting. Okay, you want to talk about our next topic, Martin?
Let's do the next topic. It's a pretty funny topic. It's a pretty funny topic to us. To this one, right? Yep, this one. Okay, perfect.
So again, let's
Go
do a
ahead.
little bit of background.
Mm-hmm.
I want to do something first. Just give me 1 second. Shop shares.
I think we can show it on
So
screen.
go ahead.
I know what you are doing. You are looking at the stock price, right?
I am, but over the last 5 years.
Over the last 5 years, okay.
So
Over the last
Shopify itself is actually a very, very interesting stock.
Yeah,
um, because during COVID, it just rallied.
yeah,
And then after COVID, it went down. And then after COVID, it rallied all the way back up to like 160 or whatever it was.
yes,
And now it's actually trending lower. And the reason why we're talking about this today, Martin, is because Shopify shares yesterday, I believe, rose after reports that Thrive Capital invested about $100 million in the company. Now, $100 million in a company that's worth billions is not a ton, but it's important for a bunch of different reasons. One of which is Thrive doesn't normally make public market bets.
okay. Yep, true, true,
It's more of
true,
a
true, true,
private
true.
equity company. So they invest in private companies.
Yes.
They've also invested in OpenAI.
Maybe Shopify has lost so much money that they consider it private now. They are like, okay, now they are
Maybe it should
small
be.
enough.
Maybe they're going to take it. Maybe they're going to take it private. No, but what's their valuation?
129 billion.
Okay, that's in the world of $1 trillion companies. It's like, who cares? They could afford to buy eBay though, probably. Anyway, um,
That'd be
so
funny.
that would be very funny. It'd be very funny if they bought eBay and GameStop was sitting there going, "We'll buy Shopify now."
Imagine the delusional, complete delusional.
And Ryan Cohen, he's like, "That's
Shop-
it."
Shopify is like, that's a good idea. We are going to buy them. And then Ryan Cohen, yeah, I'm buying Shopify now.
Like he has none of his own ideas. He just wants to buy other people's companies.
But
But let's talk about this.
yeah, yes, let's talk about it. There's a lot
So
to say
their
about Shopify.
thesis here,
Mhm.
the thesis probably from Thrive Capital, and again, it's not a big bet at $100 million. It's not a gigantic bet, but maybe they're
Mhm.
thinking, and you and I can talk about this, right? That artificial intelligence could reshape commerce,
Mhm.
and that because Shopify is the biggest kind of non-Amazon e-commerce company,
Yes.
and again, jump in where you feel like I'm wrong, that they could be one of the infrastructure structure winners. Now, this move came after Shopify reported strong Q1 2026 results, the 34% revenue growth, more than $100 billion in quarterly GMV. I don't really care about this GMV number.
Mm-hmm, mm-hmm, mm-hmm,
I don't care. It's like that's how much stuff was sold on your platform.
mm-hmm, mm-hmm, mm-hmm.
Oh, okay.
Yeah.
Okay. You know what I mean? It's like my brother went on 1,000 dates last week, but I was home alone like all the time. It just doesn't make any sense to me. I know that's not exactly what GMV is, but that's what it feels like to me. What do you think? What do you think, Martin?
So
Let's talk about this.
So I think let's go back to the beginning of the story about Shopify. Okay, like I think the story of Shopify started around 2005. Okay, and the idea was to create online store for brands. Okay, and basically like the idea of Shopify is like you can sell your stuff on your own. Okay, like you don't need to go through a mall, you don't need to go to a
For
shop.
big brands, though, yeah.
No. Even actually, no. Actually, the recommendation was much more towards the smaller brands, right? Like if you want to
Got it.
have
Go ahead.
a side business, if you want to sell e-commerce, if you want, I mean, no, if you want to have a side business, if you want to build your brand, if you want to be an entrepreneur, you can do all of these things through e-commerce, right? And really own your brand and have your own website and your own branding, which you just can't do if you sell on Amazon, for example. You just cannot design the Amazon store the way you want. There is tons of rules and that you have to follow when you sell on the marketplace. And when you build your own website on Shopify, you can do basically whatever you want and you can be happy and sell your own products. So it's really started at
Go
that
for it.
point. And I think back in the early 2000s, I think people really believed into e-commerce, like really strongly, right? Like when you think about it, that in a world with no e-commerce, when you say to people, hey, you can sell online to whoever in the country, right? That's super cool, right? Like if you are a shop and all of a sudden you can sell that you're a shop in Los Angeles, you can sell to New York, right? This is super cool. It's like
Yeah,
sorry.
if proximity doesn't matter, then it doesn't
Yeah.
matter, right? And that's what
Like,
Shopify. That's the dream that Shopify was selling.
so that's the e-commerce dream, right? Like that's what Amazon and Shopify were both selling, right? Like all of a sudden you can do e-commerce, you can sell to whoever in the country, maybe whoever in the world, right? Plus your shop is going to be open 24/7. So unlike your physical store, now people can actually buy on your shop 24/7. Wow, so cool, right? So
Right.
I think people were very enthusiastic about e-commerce 25 years ago in the early 2000s, and this just didn't happen, right? Like I don't think the e-commerce market share of retail, which is around 15 to 20% as of today, depending on the countries, right? Like there's only 15 to 20% of the goods that are sold online. I think it's more, and I think this is like it doesn't make people happy, and people expected much more, I think, of the overall e-commerce promise back 25 years ago. I think that's what has happened to e-commerce itself. Then Amazon, I think, take most of this market share when it comes to e-commerce, because when is the last time, Michael, you bought something on a branded website? It really rarely
Yeah, I
happens,
mean,
right?
I can't remember. Yeah, I
Yeah,
cannot remember.
like the only thing that when I want to buy something, either I go to the mall or I go to a marketplace, right? It really rarely happens. I think I
Yeah,
never bought
yeah,
actually anything on a branded website that could have been made by the brand itself. I think that has never happened to me. And when I started to think about it this way, I was like, yeah, actually, it's true. Why we never buy on a branded website? I think that's a trust issue. We much prefer to go to the store and see the goods, or to go to the marketplace where there is tons of comments, tons of reviews, and at least there is a third party who can handle the payment and stuff like that. So I think it's hard to
yeah.
explain, but I think people they just trust this process more, and so that's why I think if you look at the 20%, let's say, of retail that is done e-commerce, I don't know what the market share of Amazon, but I wouldn't be surprised that it's like 75% out of this 20%. So which means that the share that is left for Shopify is tiny, right? Like for the Shopify type of website is super small, and I think everybody expected way more, right? And so that's why I think Shopify, yeah.
Do you think we've reached? Do you think we've reached almost peak
So
Shopify? If you know what I mean.
yes, so I think let's not answer this question now. Okay, let's go back to the pre-AI era. Okay, when there was no AI, and
Okay,
then
but go ahead.
I would say yes. Okay, I would definitely say yes. I think the Shopify of 2020, the Shopify of 2018, the Shopify of 2015, that's exactly the same, has been as had reached peak Shopify. There was no new innovation really big that could have come. They were,
Oh, really?
yeah, they were like, this e-commerce platform that's good, that needs to be here, but there is not that big of a market for them, basically, right? And yeah, that was it, basically. So that's why I think from the investor standpoint, they were very, very not like very, what's the word I'm looking for? They just expected more from this company, and then came AI. Okay, and then came AI, and then I started to think, Shopify, they do not. Are you still here? No, are you still here? I lost you. No, we have so many problems of internet today, but so I hope I'm still live. And I can continue. Oh no. Okay, but so I was saying like, Shopify. I was okay. Michael, you are back. You
I'm with
can hear
you.
me.
I'm with
Okay,
you.
perfect. So yeah,
I'm with you.
so then AI came, and I was thinking like, okay, Shopify doesn't have their own data centers. Okay, so they
Before you go there, can I just ask you one question? I
Yes,
want you to
please.
address something before you get to this, because this is important.
Yeah, go ahead.
What you're suggesting that you don't buy stuff on a brand thing, and I'm like, I'm wearing a branded shirt. I bought this at the Emporium. Like, I
Yeah.
didn't buy this online. There's no way I would. I want to know what it looks like on me first and how it feels. You're 100% right. But when you buy on a marketplace, do you know? Because one of the things that marketplaces did innovate, but very early on, was instead of them owning the inventory, they had sellers come on,
Yeah.
and they built a platform for sellers to come on the
Yes.
platform. But do you know, when you buy something, what's your level of loyalty to any individual seller
Zero.
or merchant on the zero? So, but I want to address that first, because
Mhm.
that's going to be important when we talk later about the implications of AI as well. Sorry, go
Yes.
ahead.
Yeah. No. It's true. The loyalty to the seller on the marketplace is absolutely zero. There is no loyalty to the seller. That's just because
Don't
everybody
know,
sells the
in a way,
same thing.
don't know, don't care, right?
Don't know. Don't care. But there's loyalty to the marketplace itself, right? Like because
Exactly.
and because
I'll go
the-
back to Lazada, but I don't know who I
Yes,
bought stuff from.
Yes, exactly. So this is like a weird behavior, I think, but this is what's happening right now in e-commerce. So which means like pre-AI, Shopify had not much possibility to grow except one thing. One thing that they launched, I don't remember when, like maybe just before 2020 or just after. I don't really remember. But there was only one area where they could grow significantly, which was payments. So they started to launch Shopify Pay, and very quickly that became the main drivers of revenue. They were making most of their money through their payment offering. Okay, so which means their payment offering is the commission they take on sales, just that. Okay, so instead of sending all the clients to Stripe, for example, and say, okay, you guys at Stripe, you take the commission, Shopify launched Shopify Pay, which, by the way, they did that with Stripe. That's just a white label of Stripe, so Stripe still
On the back end, yeah.
gets a cut, but Shopify also gets a cut after they launch Shopify Pay. And so then this cut that they get on all the payments became their main stream of income, right? So which means like all the platform, all the hosting, all the subscription you pay for your Shopify online store, the theme, the plugin, all of these things makes really little money compared to the payment. And I feel like if I didn't get that wrong, but the payment itself represents like 75% of Shopify's revenue, right? It is massive. It's like 75%. It's 3/4 of Shopify's income are the payments, which is not their core business, right? So you could definitely say Shopify is much more a fintech, way more a fintech than it is an e-commerce platform, right? They don't do fulfillment, they don't have warehouses, they have a software we can build your online store, sure, but this is 25% of their income, right? So they are way more a fintech. So that's what they did before AI, okay? And then AI came. And so when you look at the position of Shopify, they make money through payment. That's not even their own solution. That's Stripe. They don't have their own data centers. They run on AWS globally. So that must be super expensive, big bill. But they never build their own data centers, the same way as Facebook has, the same way as Google, yeah, Google, Amazon,
Facebook, everybody, yeah.
and all of these guys have their own data centers. For a company that should be big as Shopify, it looks like an obvious thing to do, but they have never done that. And the reason why I think is because Shopify is actually too small. Like they were not big enough to justify the capex to build the data centers. It was just too expensive for them, and so it was just cheaper.
Why should they build their own? Why should they build their own data centers?
Just because if you're big enough, I think that if you're big enough, it just becomes economically more viable. And so that's why I think they were not big enough. They were actually too small to be at the step of becoming data centers. And once again, all of that before AI, right? Like I'm just talking about like the position of Shopify before AI. They were just too small to be able to build their own data centers. And I think right now, all of these things combined, the fact that e-commerce is like they only have a tiny market shares in e-commerce, the fact that e-commerce is a tiny part of retail, just show how at the end of the day Shopify is small, and that's also they can't build their own data centers. And so when you have AI that comes in, then Shopify doesn't have a model, can't sell compute because they don't have a
data centers,
data centers. 75% of their income comes from payments. So you have this massive tech company who can do nothing into AI. They are left out completely. Like they are not invited to the party at all, and they can't do anything.
But even if they were, Martin, what do you? Because we talked about this offline, right? Like the more I think about agentic AI, particularly from a shopping perspective, it leads me to believe that this is negative, not positive, for Shopify. And I'll give you my opinion, and then you can tell me what you think.
Okay.
If everybody at some level is going to have an agent go out and do shopping for them that has certain parameters, that has access to payments and all these other things, right? Because remember, we know Stripe is building agentic payments into their platform so that people, both businesses and individuals, can make agentic payments, which leads to agentic commerce. But we already talked about the loyalty and the brand awareness, the merchant awareness on these big platforms and marketplaces. But your AI is going to have even less loyalty. It's going to try to find out convenience,
price, maybe, probably,
efficiency, cheapness, or whatever it is. So what is the impact? And because they don't have their own compute and they don't have their own data centers, it feels like instead of investing in Shopify, you should be shorting Shopify. Sorry, go ahead.
So that's what I would do. that's what I would do. I would short Shopify. But then there is hope. Okay, there is hope. When AI comes, they don't participate into the party, but all of a sudden you have this hope that is called agentic commerce and agentic payments, right? And I say hope. It's hope for some people who may believe into it, right? Like people may be like, oh, agentic commerce and agentic payment is going to be super big, so that is going to be an opportunity for Shopify because they have so many stores and blah 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 and blah blah blah. And so I think that's what this deal means, basically. I think these guys at Thrive Capital and the guys at Shopify as well, they believe in agentic commerce and in agentic payments. But personally, I don't believe into that at all. Like, I don't see how agentic commerce or agentic payment can make a significant difference into Shopify. And if I am an investor, I take my money out of Shopify and I put it into Amazon, because I think like in the next 5 or 10 years, Amazon or Apple or Nvidia or Meta or Cerebras have way more potential to make a good return on investment than Shopify, because Shopify can't participate in the AI race out like except with agentic payment and agentic commerce that are super tiny compared to compute, compared to the model product, right? So you have this big tech company that has a great software, that has millions and millions, if not billions of users monthly, and we're just not invited to the party at all. Like, we are not in the AI race. Zero. I think that's great.
So I would say this to Thrive Capital. If you're interested in in telling us about your thesis and trying to
Yeah,
convince us that your $100 million investment into a company that's worth 100 and something billion is actually meaningful. We'd love to have you on the show to
we
talk
would
about this because we would. I'm happy to learn something about it. Look,
for sure.
we may have done way more work on this and way more information than we have, but frankly, again, just because of all the little points that we've mentioned, the brand loyalty, the upside for e-commerce itself,
Mm,
with the impact of agentic shopping, but also agentic payments on what's going to happen in e-commerce, we just love to know what the thesis here is.
yeah.
$100 billion again in the context of Shopify, or frankly, in the AI space at all, is de minimis, but it's not nothing.
Nope.
We'd love to know more.
Yeah, we'd love to know more. Then, Major, did you want to talk a little bit about agentic payment and agentic commerce? Why we or I really don't believe that it's something that can happen, because
So
if go ahead.
go ahead. No, go
No,
ahead.
because like let's start first with, so you hinted first at agentic commerce, right? Like you took the point of a loyalty, right? Which I completely agree, right? Like is the agent going to be loyal, or is it just going to be another way to compare price at scale, and at the end of the day to just find the cheapest option and don't care about who is the provider, right? So it's just going to
Right.
increase competition if that happens. But also like once again, like when is the last time you bought something on a branded website? Or
Never.
let's ask the question another way. In the last 6 months, what's the share of payments you made to a new seller, whoever
Ah, so
that
this is
is?
so this is actually really important, Martin.
Yeah,
Let's talk about this.
to a new
So
seller. Yeah. So somebody who you just
the last
started
time I made a payment to a new seller was never.
was never.
In other words,
It's happened so
whether it's an
rarely.
offline shop where
Yeah,
I have
yeah.
dinner every night, or whether it's an online shop where
It's
I just
so
that's where I
rare.
just go to buy my stuff.
It's so rare.
Well, I don't need to set up any new payment systems, and frankly, I don't want an agent. And remember, Martin, you and I are
Mm.
both early adopters, so it's not
Yeah,
like
yeah,
we're
yeah.
luddites and
No,
just
no,
go
no,
like,
no.
oh, we're never going to use new technology. We always use whatever the new technology is. Think about all the development you've done
Yep.
in the past 3 months just for us personally,
Exactly.
meaning
Yep.
us, our company personally.
Mm-hmm.
But when I think about agentic payments, I'm just thinking, why do I want to give an agent today the right to decide where I'm shopping and where I'm paying?
And plus,
That's a decision that I definitely want to make for myself. And I think humans are comfortable with familiarity. And they
mhm.
always, like, I don't know anybody who doesn't eat or shop at the same places that they always shop.
But plus also like,
Right.
so
So go ahead.
what is my agent going to buy? Because the only thing I buy are the things that I've already bought before, or I'm just going to the
Exactly.
same shop, right? Like look, we
Yeah.
are on the trip to Singapore right now. We had the choice of 3 or 4 different hotels that were at the right price and a better location. What do? We take the same one that we always do because we want the same thing, right? Because we know what we are going to get. There is no risk.
Yep.
We know everything how to handle it.
Yep.
So my agent doesn't need to do anything. I just know what I want, and Booking.com already has my card. So there is nothing to do there, right? So
To do.
even if I
Nothing to do
want,
to.
so even if I want to do agency payments, I have no work to give to my to my agents. There is nothing to do. Really, there is nothing to do. He has no website to go on to buy something. It doesn't need a card because everybody already have my card. So that's why like this thing of agency commerce and agency payment, it may happen for sure. It may work from a tech side, but it's going to represent 2%, 3%, 5% maybe of all the payments. So which means it's going to make zero difference. It's never going to give you a 10% return every year for the next 8 years, because it is just not going. And plus, people all of a sudden they don't have way more money to spend online. It's not because they have an agent that is able
Right,
to
right.
pay
Well, now suddenly I
that I
found
have
some money.
so
My
much money
agent
now,
went out and
right?
found some money for me. Now I can pay for. But here's the other thing too,
Yeah,
Martin. I just was looking at the e-commerce as a percentage of retail
yeah.
globally is 20.5%.
Okay, and in the US, do you have the stat?
Give me a second. Yeah, because
But
I
yeah.
think this is actually super interesting.
Mm-hmm.
So in the US, e-commerce accounts for approximately
Okay.
16.6% of total retail sales. But before you say anything, can I put this into
Yep, yep,
context?
yep, yep, yep.
Amazon launched in 1995.
Okay.
That's over 30 years ago. And in 30 years, at least in the US, it's only 17%
Yeah,
of retail
exactly.
sales.
Exactly. Yeah.
So every year it grows 50 basis points on average.
Yes. Yeah,
And
so
I would
that's very
submit to you
good.
that in
Yeah.
the early years, it grew way faster than it's growing today because everybody already knows it's a thing. Back then, people were like, this is cool. I can buy books
Yep.
online. So you're right. Not only are people buying the same things from the same places that they always buy, and those places already have their credit cards. Like if Amazon suddenly enabled agentic payments, would
Nobody
it
cares.
matter?
No, there is
Because
nobody.
they already have
Like,
everybody's credit cards.
yeah, exactly. It doesn't make any difference at all. Zero, zero. It doesn't change anything. And people are not going to be richer just because there is agented payment. So they are not going to spend more. Amazon is already super optimized for discovery, right? So it's much more
Yeah,
likely
yeah.
that Amazon deploys AI into search for discovery if it works, right? That if they find a way to make it work, this is way more likely to happen than everybody all of a sudden as an agent that has a card and that can pay on Amazon. This is just not going to happen for sure, right? And so this thing of agency commerce and agented payments, I don't see. I mean, once again, technically it's going to work. Some people are going to use it, but is it going to be a significant share of e-commerce and then a significant share of retail itself? I think definitely not, right? So that's why, like, if you
I
put
think
all, yeah, so that's why if you put all of these things combined, right, at the end of the day, Shopify has nothing to do. And they really left nothing for them. They can't do data centers. They can't do AI. The only thing that they may be able to try is agented commerce or agented payment, but I don't think this is going to be something. So to answer your question, Michael, I think Shopify had reached their peak before AI, and they have also reached their peak as of today. I don't see what else they can do, and I don't see. I think they are in such a weird position, but because they don't have enough assets, they are not big enough. They just can keep growing. I don't think so.
yeah, and the stock market is essentially telling you that
Mm.
they believe what you believe.
Just they are what, like, down for 40% this year.
So if I look at, I'm just trying to get the cursor in the right place. Give me a second.
Yeah, like year to date, they are down 36%. And I mean,
Yeah, 36%.
I don't know if they had like some news that were bad or something like that. But my own analysis on that is that when you have OpenAI, when you have Anthropic, when you have Amazon, Facebook, like all of these companies who are creating so much new stuff, who are getting so many more new clients, new use cases,
Right.
who have like this crazy valuation. If I'm an investor, I want my money to be in Google, not in Shopify, right? So, and for all the reasons that we have just mentioned, first, Shopify doesn't have any new product, doesn't have any new users, doesn't have any new use cases, and plus they may not have anything at all new, right? So if I'm an investor, I just put my money there, and I believe in the growth of the hyperscalers way more than I believe in the growth of Shopify. So that's why I think the
But
stock is
also,
down.
Martin, does it mean that if Shopify wants to enable agentic commerce,
Mm-hmm.
that they're going to have to remember if the UI doesn't matter anymore,
Mm-hmm.
and if the Shopify UI was optimized for human interaction, meaning a human looks at something, a human clicks on a button, a human fills out in a form, doesn't it also mean that they're going to have to create an entire infrastructure of API access for all of their stuff so that agents can actually both pay on the platform and shop on the platform?
But wait, I think before that to happen, Major, you need people to have agents. And
Agreed.
and how does that happen first, right? Like how, and not people like us, right? Take my mom, for example. How do you want her to have an agent that is going to shop for her? First of all, let's
Oh,
start here.
your mother can definitely have an agent. I know exactly how this works.
She's
She
going to
dials
install
1-800-Martin. She tells 1-800
exactly.
Martin. You build the agent. You manage the agent. You pay for the agent.
I
You
update the
do
agent. I
everything for
fix the
her.
problem. I mean, I
You're
just
the
don't
help
see,
desk for the agent.
like, because here, like, you also need to to think about like who is the target client of those people who are doing e-commerce, right? They are out of the
Exactly.
bubble completely, right? So they may use
Completely.
Chat GPT. They, by the way, stopped the integration. So they tried to integrate Shopify with Chat GPT and they stopped it, right? So it
Yep.
showed that it
Yep.
was
Yep.
not a successful test, right? So once again, it's not that they are not trained; they are trained, and it fails, right? And unfortunately, I think the problem is that Shopify has no play here. They are just too small. If at least
Yeah.
they had their own data centers, they could do something. But once again, they are too small, so they can do it. And so, how do you want people to have agents at scale? How do you want the clients that are buying on the Shopify clients to have agents at scale? This is Shopify was probably the ChatGPT was probably the only easy way to get access to this audience, right? Because people are already familiar with ChatGPT. They have their card inside of ChatGPT as well. So maybe there were an integration there to do with the payments, but it did not work, right? So if your only interface is actually not working, you are not going to build agent for everybody. That's gonna take forever
Not gonna happen.
to get to that point. And once again, if it fails with Chat GPT, it's not going to work better with your own agent. This was the exact
No.
same workflow, right? It's just way more
Yeah.
complicated with your own agents. So no, I don't see any potential future. Unfortunately, I mean, they are going to keep getting their 2-3% market share of retail, right? And that's going
Yep.
to be fine. And it's going to still be working. We're going to still have clients. Like, everything is going to remain the same. But when you look at the growth of tech in the next 5 years, unfortunately, Shopify is going to be on the sideline. They are not invited to the party. So,
No.
mm. And that's a bit sad,
I
to be honest, for a company that's had so much tech capabilities. It's a bit
It
sad.
is, but
Mm.
I will say this before we end though, Martin. I've
Yeah.
always kind of felt like Shopify, as successful as they were, was going to be sort of a transitional company where
Mm-hmm.
they were going to fill a market gap for a specific period of time,
Mm-hmm.
and then
Mm-hmm.
what they did was no longer going to be necessary because the marketplaces were just going to take over because they're way more efficient and their marketing budgets are just so much bigger.
Yeah. Yeah. Actually, like if I don't believe everyone's going to have an agent anytime soon. This is going to take like tons of time, and we need way more innovation, and like we are not ready for that yet on
No.
the tech side. But Amazon could build a shopping assistant, right? And really, that's just a better search. That's all they need, right? Like, yeah,
Yeah. Yeah.
if they can find a way that discovery is even better than it is today, if it can disrupt their own discovery, and that AI can do something there, right? And then if that may force the buyers, right? I mean, not force, but that may create such a better experience for the buyer to shop on Amazon, right? So then the brand themselves, they can't not be on Amazon, right? So this is way more likely to happen because Amazon has the resources, has the infrastructure, has the tech guys to build something that could help do a better search, right? And so if
Yeah.
Amazon tomorrow can do a better search, this is that's a huge threat for Shopify, because then Amazon could get even more market share of the e-commerce pie, right? Because once again, if
Yeah.
all of your clients want to buy through Amazon, then you sell your stuff through Amazon. Even if you want to build this beautiful e-commerce website, if your clients want to buy on Amazon, you get to sell on Amazon. No choice, right? And so,
Exactly.
and that's way more likely to happen to me.
Let me give you one more piece of bad news
Tell
for
me,
Shopify.
tell me.
Amazon's advertising revenue for 2025, yeah?
Okay,
Their ad revenue, not their
okay,
sales, not the money
okay.
that they made from e-commerce, just their ad revenue. In
Tell
other
me.
words, just platform revenue, yeah?
Yeah.
According to the Google machine, is $68.6 billion.
Oh wow.
Shopify full year revenue for 2025 was $11.6 billion.
Oh wow. They spend 5 times
The
more in
whole thing.
marketing. They spend 5 times more in marketing than Shopify made of money.
No, 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 no. It's not that. The
Okay.
people, their revenue for ads. In other words,
Okay, sorry. Oh
so
yeah, oh
people
sorry, sorry,
pay
sorry,
to
sorry,
for
sorry, sorry. Yeah.
placement, yeah,
Oh yeah, okay, sorry, sorry. Yeah, okay, yeah. Okay,
is
so
6 times higher than is 6 times higher. Just the ad business, not the e-commerce
just
business, is
wow.
6 times higher than Shopify's total revenue. So
Yeah.
this is a problem.
This is a massive problem. This is a side business for Amazon.
Exactly.
this
This is a side hustle. It's a side
this
gig.
the side
This
gig
is their
for
gig work.
exactly like the side hustle for Amazon, selling ads on their platform, right? That's the only actually that's the better search maybe for them, right? Like we were
Yeah.
speaking like the better search could be afraid to Shopify using AI, but why would they need to do that? They made $60 billion a year just through ads, so just keep selling ads, and then you sell the e-commerce as well behind, so the lifetime value per client on Amazon is massive, right? So
It's
that's what I
huge.
just as a e-commerce enabler, the Amazon product just worked much better, right? So which at the end of the day force the brand to sell on Amazon. They may have a website as well, but like you get to be on Amazon. So I don't see why you would bet on Shopify in the next 5 years and why you wouldn't put your money in Amazon, for example, because
Yeah, I'd
Amazon,
rather be an investor in Amazon than an investor now I'm in Shopify.
for
Okay.
sure. Mhm.
Let's end that here. How does
Yep.
that sound to you, Martin?
Yes. If the audience has
Let's
any
thank
question,
everybody.
yeah.
Yeah. Sorry, go ahead.
No, if the audience has any question about Shopify or this type of deal, as you see, we are pretty passionate about that. so
Yeah,
so
we've thought about this before. We
we
loved when this news came out because we really wanted to have an
mm,
excuse to talk about it,
mhm,
and there it
mhm.
was. Okay, thank you everybody so much for watching the show again today. That's it for AGTP Daily. Thank you as always for joining us. Give us a thumbs up on today's video. Subscribe to our YouTube channel. Follow us on all of our socials on X, on Instagram, and on LinkedIn. And as Martin said, if you have any questions about anything or any comments or anything you'd like us to talk about, anything you'd like us to follow up on, please let us know. We will be back on Monday, since today is Friday, at 11 a.m. Eastern Time. That is Martin Runfort. My name is Michael Waits. Bye for now.
Bye bye everyone.